This is that asymmetry we're talking about. It's still very early for us in the game, but to us, 100K feels like a big amount. But remember, this is only a 15-year-old asset. And so 15 years from now, we'll be well over $1 million in fiat terms, all things considering similar conditions. I think 2028 will kind of be the end of that phase. And then you go into adoption, where it becomes truly adopted and you get this exponential S curve. And then dominance is the last phase. And that probably won't happen until you and I will be very gray hair, I think, when that happens. So you get these structured institutional moves where it just kind of moves up and up until you get a whole paradigm shift where the US announces a buy, or BlackRock announces that this is the asset that they're going to invest in, and then it just blows out again. And I love the meme, like Bitcoin is the intelligence test.
Hi, Tim. How are you doing? Everything fine on your end?
Yeah, doing well. How are you, Robin?
Absolutely, really good. Thank you so much for being on. It's been a pleasure. I've seen your podcast on Prime, and I was like, really cool that you're involved in Bitcoin. But for the few people that don't know you, for the few people that haven't seen you, maybe give them some background of who you are and especially why you are excited about Bitcoin.
Yeah, so Tim Savage, I'm a tax partner at Weaver. I run our digital assets practice, and actually am transitioning out of this role and more into a consulting role, and starting my own Bitcoin-focused hedge fund, and kind of formalizing that now and launching on January 1. But I've been trading the markets for upwards of 8 years and with great success, and I love the Bitcoin market and Bitcoin as an asset. I've been in that space since early 2017, so not OG, but almost half of Bitcoin's lifespan now. Seems like not very long, but at the same time, like an eternity. Very, very hardcore Bitcoin maxi. Very well connected in the space. I've spoken at the last 3 Bitcoin conferences in the U.S., so Miami, Nashville, and Las Vegas most recently. And yeah, just very excited to talk on this podcast with you today.
Awesome. I love, by the way, the last name, but you probably get it so much, Savage. That's really cool. But for the few people, and also for me, it's kind of hard to grasp what a Bitcoin hedge fund might do.
Well, yeah, it's interesting. A lot of the hedge funds out there today are very institutionalized. Some of the older ones, or I would say early ones, have grown to be behemoths, and they kind of pivot their strategies as the markets have grown and become more saturated. But interestingly, a lot of hedge funds in the digital assets markets, they're not focused particularly on Bitcoin. Now, there's others, like the Early Riders Group, or some of the other very focused Bitcoin companies are more like venture capital, or kind of funding startups and angel investing. But hedge funds specifically don't really use Bitcoin as their beta oftentimes, other than maybe ARK Invest might be one of the most well known, and a couple others. But at least when I look at the markets, there's obviously, we know Bitcoin has been the best performing asset in any long duration period, and to me, it makes total sense to use Bitcoin as kind of the centerpiece of a hedge fund portfolio to capture the upside beta, while anchoring to using derivatives, and anchoring to something a little more stable that might generate yield, and so that's a core piece of our strategy. And then also having a kind of a trading, whether it's quantitative and proprietary, which is what we're doing, kind of a trading and hedging long-short strategy, so that if we expect a prevailing bear trend, we can short the market and cover if we need.
That's super interesting. It's also, we are living, I think, through the Bitcoinization of TradFi. Like if you think about traditional finance, now slowly they all get Bitcoin. And now I feel like if you just come from the Bitcoin angle, like I am, it's sometimes you see everything through Bitcoin, and all the news that come through your feed is all Bitcoin. And so it's really interesting. how would you describe how far we are in this Bitcoinization of TradFi? How deep did Bitcoin already kind of went into the traditional financial space? Because I think I'm in a small bubble that sees only Bitcoin at the moment.
Yeah, it's a great question. It's interesting because I kind of straddle both worlds, still in the TradFi world with a lot of my clients, but obviously working with a lot of Bitcoin companies. And I just started a Twitter account earlier in March this year, but I'm just being in the Twitter space for 8 months or so. I've very quickly gotten integrated into that whole world, and so my post is mostly Bitcoin related. But I think we're very early in the game still. A lot of the TradFi, even the biggest money manager in the world, BlackRock, is still kind of early in this game of. They've created some very successful financial products, but they're still learning. They're still kind of projecting out and figuring out where is this market going to go. And that's kind of simultaneous, which has now been formally labeled as the debasement trade. Obviously, you and I know of this idea, this concept for many years now. But TradFi is kind of locking into the whole idea of a exponential debt crisis and just the amount of currency printing that has to take place to run the economy hot still. And so that's why precious metals and gold specifically have been running up so high this year alone. And Bitcoin, it already had an explosive parabolic move earlier, and I expect another one throughout early to mid 2026. But yeah, I think they're still trying to figure out what is this thing. Is it battle tested enough to really convert a lot of capital into it? Is it serving the function as a store of value really, or is it still a speculative thing? And so as they kind of grapple and understand the concept of Bitcoin more holistically, which does take a lot of time, I think we will start to see that conversion rate and adoption of it as a useful asset as it was intended to be more and more quickly over the next few years.
This was something interesting because I didn't realize that, but a lot of people explained this to me, where if Bitcoin gets to be bigger and bigger in market capitalization, it attracts bigger and bigger pools of money, which for me as an investor sounds like weird, because if something rises in prices, like I want to buy it as cheap as possible. But apparently if it rises in price and rises in market capitalization, it gets more attractive for larger pools of capitals.
In a way, yes, it's really a reflexive cycle, right? As traditional finance looks at the potential asymmetry in the growth and the gain, I think they might recognize that the 1000X those days are gone, but also they're not going to participate in a market that's undercapitalized and just has heavy volatility. And so as Bitcoin gains additional market capitalization, the volatility starts to compress lower to towards the low end, and that gives them the confirmation of yes, it is starting to serve the purpose as a store of value, and you'll see kind of a mixture of risk allocations, people still viewing it as a risky asset, but those will start to tail downwards into more of, hey, this is going to be a store of value, and it is kind of a self-fulfilling prophecy in terms of that concept. And so as it gains additional capitalization, more firms, more institutions trust it to hold their capital. Um, and obviously we know Bitcoin is very sensitive to liquidity, and so as more liquidity enters the markets, they need a place to place or to allocate that liquidity, and Bitcoin, it's poised to just consume a lot of that capitalization as more of these traditional products come online and people start to understand it more broadly and are more willing to allocate towards it.
And it's also interesting because we have this, I think you mentioned it before, the debt crisis, and now we've hit the 38 trillion, and I think it's not that long till we hit the 39 and the 40 and the 41. And then you kind of wonder, like, who are the assets that really benefit from that? I mean, you mentioned gold, you mentioned like any kind of hard assets, but I think like Bitcoin is probably the one that like will benefit the most from it. It's also like the most correlated in terms of like what the community is speaking about. If we think about like all the Bitcoin podcasts, all the community aspects, all we talk about is how messed up the financial system is. And so what do you kind of see when we see more and more printing and more of the debt crisis coming? What does this also mean for like Bitcoin in the coming months and years?
Yeah, I wish I could answer that with high certainty. I feel like I do have a very strong grasp of that, and a lot of Bitcoiners are obviously extremely bullish. But I think it is very prudent to think about how that game theory plays out, or really how that um, that cycle plays out in terms of the Lin Alden nothing stops this train concept. And I agree, by the way, with that. But it will be an extremely volatile road to get there, and it might actually end with a collapse of Bitcoin and fiat denomination, and then an ultimate conversion of Bitcoin as the unit of account across the world. Now that might take a decade or more to play out, or it could take several decades. It really depends on how fast the dollar and other fiat currencies are spiraling out of control. To me, it looks like mid to early 2030s is going to be a very pivotal point in terms of debt just getting way too overloaded and unserviceable. That's at least what the math looks like it's saying. But the way I am kind of theorizing on how this plays out is you've got the US who is deficit spending out of their mind. You've got debt just growing to exponential levels where at current rates, and even if they drop them, you're starting to see the mechanics of interest rates and liquidity, and then the use of USTs as a risk-free asset, the real rates starting to blow out. And basically foreign governments, foreign central banks are looking at USTs and saying, well, these aren't going to yield the, in real terms, what we need uh, to slow the growth of inflation, or really, to anchor our economies to. And what will happen is, and we've already seen this coming into play over the last 10 years, where USTs and foreign central banks as a reserve asset have declined significantly from around 75% to today it's around just over 50%. So what that means is the dollar is losing its dominance in terms of being a reserve asset. And as it starts to decline, and we have many empirical examples of this, by the way, with the pound, the guilder, even as far back as Rome. Whereas your reserve status starts to decline, you're stuck in the space where you've got extreme debt load that's unserviceable, and you essentially have to either default on that debt through not paying, or have like a structured bankruptcy, or you have a massive print, which is like Larry Lepard's big print theory of you just devalue it all at once. And Luke Gromen also talks about this. But essentially, what that does, it's gonna wipe your economy, and you're gonna have some really tough times. And as you lose reserve status, you can only do this like this heavy printing as the reserve currency. So once you lose that status, you no longer have the power to print and really export your inflation across the world. Eventually, everyone, and again, we're seeing this with foreign governments, they're saying we don't want your debt, and they're going to convert to something else. So I say all of that because what seems like will happen to Bitcoin price, at least in dollar terms, is it will bubble up and continue to grow in fiat denomination. And then people, just like what they're doing with AI and with a lot of these tech plays, is it's going to convert a lot of capital into it, which is a good thing because it's going to increase adoption. But then you will see as the U.S. starts to um, not be able to manage its debt and its economy will have to contract, that default will happen through a hyperinflationary event or a depression style event. And in that credit has to get wiped completely. And I expect like 50 to 80% of the credit will just get cleaned out, and your economy is going to contract. And what that means is in fiat terms, Bitcoin is going to collapse down too. However, in the event where you have a currency collapse, people search for scarce assets. They're going to go to gold. They're going to go to other assets that are more neutral. And Bitcoin, obviously, we know is the most liquid, most available neutral asset. So they're going to go to Bitcoin. Um, and so as it collapses in fiat denomination relative to other assets during this devaluation period, uh, Bitcoin is going to hold and then gain significant purchasing power compared to other assets.
It's almost like the big short all over again, where now Bitcoin is the bet against the system. And I mean, it's not just it's a different kind of a problem, but it's similar in nature. Do you think that there is, because there's like those two theories that we gotta like slowly ease into it, and then there's the gradually then suddenly theory where we all of a sudden, like, I think I had Parker Lewis from Gradually then Suddenly from the book on, and asked him this, like, what is the trigger? Like, when do we know it's actually happening? And he says, like, one of the G3 nations has to hyperinflate. So like the euro, the dollar, or the yen. If one of those three nations hyperinflates, like it's all over. How do you look at the kind of the concept between what can trigger such events in the end, or is it maybe like we easing more into this problem and then like going there?
Yeah, I'm very much in agreement with the gradually then suddenly theory. We've been seeing the gradually take place really since 2008, and I think we're moving very quickly towards the suddenly piece within the next 5 to 8 years. You're correct. A lot of what's been happening is actually mechanically between the U.S. dollar market and treasuries, and also the yen market, where Japan has been a black hole for capital, and a lot of funds have been leveraging up, and we call it the yen carry trade, where they got very cheap yen, and then they could run the basis and leverage the carry, the difference between rates in the U.S. and a very cheap yen. And so all of that is now created this structural problem where so much capital is invested in this deal. And actually, as we see Bitcoin's price kind of decline over the last really weeks or so, and month since we've seen U.S. rates come down, is a lot of that carry is starting to unwind, and they're trying to reposition and figure out, hit targets on the discount rates of bonds and their value. So every time you saw the rate cuts for the last few times, you saw treasuries, the market rates blew up. And then that's the yen carry trade. Essentially, a big piece of that is the carry trade unwinding. So what that means is, as you continue to run rates lower, at least by kind of artificially through the Federal Reserve mechanic, uh, the yen is now stuck because Japan is in a place where they can't really lower rates. They don't want to lower rates. In fact, they're increasing. We saw them increase for the first time in the last 12 months, and they probably will need to increase again, is my expectation at some point. So that's starting to break the structural system. Now, the question is, as the US lower rates, if we keep going lower, obviously that's going to spike inflation over time. And so we're stuck in this place where do we have this structural blowout between this carry trade, which is going to where a lot of this credit is, and then it just gets wiped, and you have a bunch of hedge funds and essentially a systemic banking collapse? Um, or do you just try to run it hot and hope and just try to band-aid everything? um, and I think they're going to try to run it hot, but at the same time, it's things are starting to get wobbly here, and there's cracks showing in the system very quickly. So yes, it's been gradually building up, and then there's going to be a sudden crack. The question is, can the U.S. How much longer can we do this type of printing, where we are the reserve currency, um, and basically and export our inflation and debt to everyone? At what point do foreign banks and countries look at us and say, no, we don't want your debt anymore? And if essentially that's the nail in the coffin for Treasury reserve status. Um, and all of that ends, you don't know. Is it going to end with a depression or really an extreme inflationary event? Either one is a painful scenario in that case.
And in the past, this usually ended up of like there is one strong superpower, and at some point it goes down, like the Ray Dalio kind of theory, and then there's a new superpower kind of emerging from that. So is it possible that when the US loses their uh, reserve status that just another power like grabs it, and like then we go in those those cycles all over again, or might just be Bitcoin an end to those cycles, or is Bitcoin just another gold, and we will have maybe China come up, and like something else comes up in outside of the US.
It's a good question. The problem with what's happening right now is in the past, we didn't have such a globalized system. So whenever Britain went down, or really, when Portugal went down, Spain was there to take over. When Spain went down, like the Dutch, or I can't remember the exact, lineage of all the European change in reserve, but it happened 5 or 6 times, and then preceding us was Britain. Well, now we're such a globalized economy that this whole debt situation is not just a U.S. problem; it's an everyone problem. And China is going through some very significant structural issues in their own economy. They also have a population issue, similar, actually worse than the U.S. But typically, when you get significant population decline because of their one-child policy, that is a very negative thing for economic production. It also increases the wealth gap significantly. So China is not really in a place to become the immediate next, I guess, successor for a reserve currency. Russia might make a play, India might make a play, but the reality is all of the economies are sucked into this fiat trap, this debt cycle. So what I expect is after there's kind of this unofficial or official loss of reserve status, you're going to have some very volatile times where all the fiat currencies are extremely volatile against each other, and the system will search for probably neutral assets, or you'll have alliances between like the BRICS countries, for example, where they just decide to create their own system of trade, their own currency for exchange. But I think it's going to tend towards gold and hopefully Bitcoin as neutral assets, so that settlement is more neutral as opposed to specific to a sovereign.
It's actually a good point, because like there's nobody really in place to take over from the US. Like there's nobody that I would be like, oh yeah, like they're ready to take over. It's like they all have their own kind of big problems in a sense.
Yeah, that's exactly right. There's basically extremely volatile conditions, and I think we're going to have to live in that world for potentially up to a decade until things kind of settle down and reset, and focus will shift from more of this neo-Keynesian monetarist policy of central banks more to saving, economic production, looking at real value of things, and what resources and assets do you have geographically, and go back to more of a pragmatic sense of trade, and then economies will reset over time.
What does this actually mean for people because I think most people have no clue what's going on. They still think we only have temporary inflation because of Putin. like we all like weird arguments like that. And obviously, like most of my audience and you get it, that we need Bitcoin to protect ourselves. We need to take self-custody. We need to do all those things. And I have a very good feeling that those people who get Bitcoin now will probably be fine even in this volatile area. But we have to be realistic. Like we are a few, we're very few people in general, and like and there's the mainstream of like 95 or 97 or 98 or 99% of people that are completely unaware of that. What does this mean for everyone that is unaware of Bitcoin or sound money, or how to protect yourself in these volatile areas, volatile times? What does this mean for like, we call them normies that don't have Bitcoin, when like a G3 nation gets hyperinflated, when the US officially or unofficially loses this reserve status, and all of a sudden like it's like a free floating thing and it's volatile and prices go up and down, and like we don't really know what to do?
Yeah, I really hope for the best, but I kind of expect a very negative outcome for most people who can't convert out of the system. To me, Bitcoin is the most sensible and pragmatic way to kind of protect yourself. Um, Typically, what happens is whenever banks and sovereigns lose control, is they start to implement capital controls. They set wage limits, price limits, and essentially gap and and contain all of the capital within the system so that they can try to control it as best they can. We saw this happen with Greece, with Turkey, with Argentina, with basically any country who's suffered through hyperinflation. Um, and the problem is when you're the reserve status country, you don't really have anyone to bail you out. Typically, and sadly, what's happened is there's war. There's either internal or external conflict, and then there's a new superpower that rises through that. I very much hope we don't go into that scenario, but it would be a, a possible possible scenario that we enter into. Um, but in the event of no war and then you just have significant capital controls, they're kind of stuck and ingrained into the system. Um, Again, all that credit would blow out, or you just hyperinflate and lose all your purchasing power. And it's going to be really painful for a lot of people. You're basically just going to have to go to work and deal with it. If you have work, by the way, if you get out of the system earlier enough, well, then you have Bitcoin, you have gold, you have neutral assets that people are going to want. And your purchasing power is just going to skyrocket because um, whether it's an official market or a black market, it doesn't matter. People are going to want your Bitcoin, and the hope is that it's proliferated enough to where the institutions, the sovereigns, understand what it is, and they either anchor to it and try to get as much as they can to help their countries, their people, or uh, they just allow it to happen through a free market, which would be even more ideal. But in any case, getting out and getting to a neutral asset as quickly as you can right now is the smart play.
So there's for you a possibility where Bitcoin almost gets to be a black market thing that everyone wants, but the governments really hate it because it doesn't allow for the capital controls they set in place because everything is so floating around. And in that case, people will still accept it because they really, really badly want it. It's almost that small snippet is probably the best advertisement for self custody. It's like, oh, like if you see all the things that kind of happen, like you kind of want that. I really hope that doesn't happen, and I'm almost like I'm more positive that that doesn't happen, but I'm aware of that possibility, which is scary because you don't like even if you have Bitcoin, you don't want to be the one that is kind of doing something borderline criminal of like dealing with Bitcoin under the hand. Like nobody wants to be in that situation, but it's a possibility. I think as you pointed out, and better be prepared for it. And it doesn't happen, then it happens, and you're not prepared for it, I guess.
Yeah, I agree, and there's two dichotomies here in a nation where uh, property rights and freedom and liberties are respected, like in the United States, which is an amazing thing that we have. Um, we've seen that prohibition doesn't typically work. It hasn't worked with illegal substances. It hasn't worked with uh, alcohol. It just typically, it actually will grow in areas where it is prohibited. And if they try to ban Bitcoin, there will probably be a scenario where there's kind of like fenced Bitcoin inside the system and kind of like more free market flowing Bitcoin. Um, and who knows what that looks like, whether the government tries to really blitz the unfenced Bitcoin or whether it just kind of grows and gradually goes into the fence system until something structural changes. However, in on the opposite side of the spectrum, in countries where it's extremely your rights are not respected, China, for example, they can pull off more of the fencing everything together and then punish you for trying to be participate in the free market. And so I really hope we don't end in that scenario altogether. But that's what I expect. If that plays out, is you'll have these two dichotomies.
I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use simplemining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. It's probably a mix where in some countries they are going the more free route and the other a more communist, more socialist route. And so it's like almost like I sometimes paint those pictures of we have countries that will go the Bitcoin route and try to compete in a free market, try to win with innovation. And then there's the ones that try to win with CBDCs, with communist, with socialist kind of agendas. I hope Europe doesn't end up there, but there are some things that might develop there. I don't know. I don't like politics to get involved in there, but it also they're the ones in the end of the day that kind of dictate in how we react to those things. So it almost seems like something we have to pay attention as Bitcoiners, because there could be a country, all the things that we are describing could be happening. And there's a Bitcoiner in the world that does great and like he lives a great life. And then there's a Bitcoiner in the world at the same time that is followed, that is hunted by the police, just because they have the same belief sides, but in different sides of the world, just because the government in their country wanted a different path. It's interesting. I think we're entering interesting times the next 5 to 10 years. I think that's for sure.
We very much are. And by the way, this is why the medium of exchange thesis has to play out and play out quickly. Kind of like the Jack Dorsey idea is like, this is not going to work long term unless we can get this fully facilitated inside the system and people can transact and use it, whether they choose to or not to. The ability for them to have that option is so important, because and Bitcoiners really need to understand this, that what good is Bitcoin if you can't use it? If you're going to be persecuted for having it and you just have to hide it, it's not useful for anything. You could go your whole life in a scenario where things are very controlled and your rights are not respected. So you need this. You need the education from policymakers and from regulators. You need the powers at the highest order to understand that this is a good thing, and for them to want to adopt it and let it grow. Thankfully, in the U.S., we do have an administration that is very open to this. However, that can flip on a dime. Um, but yes, it's very important that this proliferates throughout the world very quickly so that that option exists and people can use it.
I have, when we think about Bitcoin, what do you think will happen to Bitcoin? Maybe let's stay with let's stay more recent and then we move out, because it's right now the Bitcoin price is low. Like people are like very not excited about it, and they're like, okay, it's basically the same price that it was in the beginning of the year, and I like it because like it means more satoshis for me. It means more freedom. It means like for the same amount of dollars that I get every month, even though I earn in Bitcoin, but it's denominated in dollars, so I get more satoshis each month if the Bitcoin price goes down. At the same time, I'm wondering about it because everything seems so bullish. Like there's almost like nothing really out there that like fights against Bitcoin right now. Outside of maybe OG selling and all of that, what might be happening, which like 100K is I think natural. What do you think is the uphold that is currently going on in the Bitcoin price, and how do you see it moving forward in the next couple of months and maybe year?
If we were to look at Bitcoin price today and look at the sentiment, which is today, like max bearish, everyone's like, oh, we're about to capitulate, and it could be that we do. I don't see a scenario where we drop back under the fair value gaps that were left earlier at around 85 and 92K. That's kind of like my base low, unless just something blows up systemically. Even then, I know that they're going to print in the short term, and they can do this in the short term, and that's just going to blow prices right back up. Um, but people can't forget that Bitcoin makes its moves. Um, there's only about 1 to 2 times per year where it makes a significant move, and beyond then, you get to a distribution and accumulation zones. And remember that a lot of people subscribe to the 4-year cycle theory, and which I believe we decoupled from that almost a year and a half ago, because Bitcoin was already rising at a much faster pace than it had been in the prior 3 cycles, in kind of the year before the halving occurred, um, 2 years ago. And so now what you're seeing is a very structural change in the order flow. And right now we are in a distribution phase, but at the same time it's moving to larger institutional hands. You still have a lot of OGs and a lot of Bitcoiners like yourself and myself who are just going to hold ad infinitum, and not sell because we know what we have. And over time, that long term holder base is going to continue to ingrain more and more people. Now, again, you've got kind of the structured bid up, and then when it makes a move, it's just a very, very volatile move to the upside or the downside. And we've already seen 1 to 2 moves happen this year. The fact that sentiment is max bearish and we're still at 100K, even when we go to 80, that's a very good signal to me. It means that um, the holders are still holding, and more capital has come into this system. When people look at markets too, remember that everything is narrative based. Right now it's AI and everyone's going to AI stocks. We even see it on a mini scale with Zcash right now. Everyone's going to Zcash, and like, why do you go to that garbage? But then they'll they'll cycle back into Bitcoin when it makes its explosive move, and then you'll have a redistribution of capital, changing of hands. And so I think this is very bullish for long term, but it won't take away the fact that things are volatile still and will continue to be.
So it's basically just like this is the way to wait and to hodl, because you don't really know when this aggressive upwards movement will come, and it will come at some point, and you just know what Bitcoin is, and if you know what Bitcoin is and what you're holding, you're not gonna sell it anyways, and so you just hold it through. Like, I mean, it's almost ridiculous to think about that, because we have been up year to date. We have been up the last 12 months. We have been up like at every single metric that you can take a look at, basically. But it's just like people want more and faster. So I don't know. It's just like a lot of impatience also, I see. But the second thing I wanted to ask you about was and I want to show you this chart. You probably have seen it around, but for the viewers, the gold price in the Weimar Republic, where is it? Here it is. When it was from like 1914 to 1923, and you kind of see the percentage change in the gold price on a monthly basis throughout the years. And it's just tremendously volatile, what gold price did. And I have a weird feeling that volatility and Bitcoin and coming to that thing might be similar to what we're entering. Is that something also that you're looking at?
Yeah, I agree, because when you have scarce assets with that are supply side inelastic, it's extremely sensitive to the demand side of and liquidity, essentially. Um, I do agree that Bitcoin's going to continue its volatile move, but to the upside over time, just simply because it's becoming an increasingly important asset, that idea of scarcity, in tandem with like the de-scarcity and the printing of fiat currencies. When you look at forward price, you are so right that people just need to be patient and not get greedy and just lower your time preference, right? It's like the fact that just 4 years ago we were under like 30 or 40K, like you doubled. If you held during that price, you doubled to tripled, or maybe even 4x if you bought it at like peak bottom, like 20 and into 22 at like 16K. um, you've done very well. So just be patient. And for all the newcomers, it's the same thing. Is like there used to be days even 5, 10 years ago where if your stocks went up 1 to 2% in a day, you were thrilled. And like now Bitcoin might go up 8% in a day, and they're like, oh, that's they're not excited about that. But remember that like its moves are explosive. Now you have to also think like an institution, right? So right now, a lot of retail, they're feeling the squeeze of inflation. Most people do not have savings; they don't have capital to invest. They're just trying to stay afloat, and so that dynamic where things are tight, that constrains your liquidity inflows to assets like Bitcoin, because they don't have anything to allocate. The people who did allocate already, they already have capital. They're not, there is a steady stream from those folks stacking more and more, but not at aggressive levels. And so this is why institutions are driving price action. They're looking at the markets, they're looking at liquidity, and they're saying at what levels are we willing to allocate to. And we're approaching a range where this is becoming a very attractive price, because we've sat over 100K for about 6 months now. And if they see it at that level at the bottom of the range or drop below, I guarantee you they're going to buy that up very quickly. Now, institutions are the ones with capital, and right now they're looking at the macro structure. And because the government has been, the US government's been shutting down, there's no flow of liquidity. Everything's propped up on deficit spending, remember? So they're shut down. A lot of this capital is not flowing through the economy, so it makes sense. I actually posted on October 17th on my Twitter saying like, hey, everybody, watch out. When the government shuts down, liquidity is going to get tight, and you'll see asset prices drop, especially in assets like Bitcoin that are sensitive to liquidity. That is going to change over the next 6 months. I can't scream that loud enough. The Fed is pivoting to QE, rates are coming down, the bank reserves are getting extremely liquid, and every time that happens, you get this massive expansion in M2, and assets like Bitcoin are going to blow out because hedge funds and institutions are going to quickly allocate. And so you get this temporary flux to the upside of liquidity and then new allocations. And then the same thing will happen probably towards the end of 26 and 27. I'm getting very bearish based on the metrics I'm looking at, and you'll see that liquidity contract again. And then we're going to deal with high inflation, and the Fed might actually have to hike, and then bank reserves will dry up, and et cetera. So you see these cycles of liquidity, and we're about to go into a highly expansionary cycle.
Interesting. Do you actually do you also think that the cycles in Bitcoin also continue to be like that? As always, every cycle they talk of like a different cycle this time, and there's always great arguments for it. But it actually seems for me that there's a lot of really good arguments why the cycles will be different this time around.
Yes, I do think again that we've decoupled from the traditional 4-year cycle in terms of just absolute 1,000% gains. One, because the market's much more capitalized now. That doesn't mean that we can't still do a 2 to 5x in any 1 year, especially if the U.S. announces like actual acquisitions of Bitcoin at the federal level. That's a white swan. It changes the game completely. Now, absent of that event, you still see the structural institutional bid as they're looking at price ranges and just looking at, you know, at what point do we allocate. Also, a lot of pensions and corporates are very bureaucratic, slow to move, but when they do move, it's a big move. And so even a couple percent allocation from a corporate or institution in their retirement plans or whatever they're allocating from, that when you combine that in aggregate, that's a big bid. And so you've got the structural bid, and the halving cycle on the supply side, it becomes less and less important. I think 2028 is the final cycle that will see a little bit of that dynamic come into play. But you have to remember that like almost 99% of supply has been issued. So you've hit very much critical mass in terms of um, supply being in the system. And so really it turns into the thesis of, is this going to be a store of value, and is this a good asset? And the answer, obviously, we know is yes. It's the most scarce asset that exists out there.
It's almost if anyone because there's still beliefs outside of like we're still so early that this thing that we think so logical about is an outsider's opinion. Like it's almost like a very it's almost like you have inside information on a company that's publicly available and you just wait for a thing to happen and you're like, oh, you make massively gains on that. And it almost seems like an insider trade of some sort, even though it's all public information, because like the whole Bitcoin purpose is that there is no insider trading. Like there's no insider because there's no like company or like institution that has any say over the network. So there by definition cannot be any insider information, insider trading. I mean, okay, maybe if a government official the day before Donald Trump announces that they're actually acquiring Bitcoin, hears it, then I mean, there's it's a different kind of insider trading, but there's not a Bitcoin specific one. But I guess there's still some kind of insider trading going on. I guess I don't know.
Well, really, it's I love the meme like Bitcoin is the intelligence test, right? Is the majority of people when things are good, and things are starting to feel less good right now, but even 3 years ago, excluding the pandemic, or maybe let's go back 6 years ago, things were good, so people aren't concerned about their currency. And when they hear that, people, early Bitcoiners saying, "Oh yeah, like our current system's collapsing," they look at them and they say you're crazy. But now, they kind of look at us and they're starting to understand, but they still haven't felt the pain yet. And it's not until the majority of people feel the pain that then it's getting too late for them. So this is that asymmetry we're talking about. It's still very early for us in the game, but to us, 100K feels like a big amount. But remember, this is only a 15-year-old asset, and so 15 years from now, we'll be well over 1 million in fiat terms, all things considering similar conditions. But when you talk to retail, or we all have those people that we talk to who aren't, own Bitcoin, who don't own Bitcoin or aren't in the system yet, and they're like, "Oh, I could have bought Bitcoin when it was $1,000 or $5,000," and like hindsight's 2020. they don't understand that Bitcoin where it's going, and they don't feel the pain yet, so they're going to get left out. And so the people who are prudent and who look around and say things look shaky, things look kind of scary, so I'm going to allocate towards this magical internet money called Bitcoin. Um, it sounds less far fetched, but I think people are starting to get it. But the earlier you get in, the more asymmetry you have.
How do you explain someone, like, because I think we get it, but like do you explain someone how early in Bitcoin we are? Because so many people, especially people that are newer to this game, look at 100K and seem like, oh, we've come so far. But the same arguments were made when we hit the $1,000, the $10,000. They even like early posts when we hit $100. People are like, "Oh, I missed the train because Bitcoin is already at $100." Now they're biting their ass because it's 100 times higher than that.
Yeah, it's kind of interesting. I always go through the orange pill route. It's I'm that guy that everyone knows I'm the Bitcoin guy. So if they want to have a discussion about it, I always approach it from their angle. Try to put myself in their shoes and approach it from their angle. What are you looking at Bitcoin as? Is it a risk asset that you're just like, oh, I have extra capital and want to allocate to it, and maybe leave it there for a while and take a gain? Or do you recognize that there's a structural issue in the system, and you want to protect your family? And in case something does happen that's detrimental, you have an escape route. And so it really depends on how people are viewing it as an asset. And then I try to give them the bigger picture of, if it's a risk asset, give them the picture of this is actually the least risky asset from a structural standpoint in the financial system. If they already understand kind of the idea of it functions more like gold at the moment, well then, it's easier to explain the debasement trade and those concepts. And I would say I've been highly successful so far. I probably orange pilled over 100 people, so that's great. And it takes time for them to get comfortable with it. It's like, okay, just lower the time preference, right? I've given you the math. I've exemplified it through my own, um, you know, talking about it in my own portfolios. If you're just patient, it's going to bear a lot of fruit for you.
I think so too. And as you said, it's almost like an emotional intelligence test, where you have to get over, and we all had to get over that hump, that it wasn't the first time when we saw Bitcoin that we bought Bitcoin. It was probably the 7th time or the 20th time that we saw Bitcoin, and like 2 years, 5 years, 3 years, 7 years later, which makes it hard because you saw Bitcoin, you could rally up, you might even got a negative opinion on that because you saw some headline and you got like triggered, or like, oh, it has more electricity than Austria, like whatever. And then 3 years later, 4 years later, you slowly get it. It's like, oh, okay, those Bitcoiners were talking actually the right thing. They were actually warning us about the right thing. But then you have to go over your over your ego and say like, oh, I was stupid 4 years ago, and now I have to pay a 10x higher price. That sucks.
Hmm.
So I get it from a lot of people, and it's hard. And I think we we keep winning as long as we stay humble.
Yeah, it's the ego tax. You're right. But still, we're so early in the game. And that's what the current discussion I'm having with a lot of people is like, oh, I could have bought it at 10,000 or 15. It's like, okay, well, if you think it's going to go back to then just wait. But I think, and based on my experience and my involvement in the markets, that this thing's going to go another 5 to 10x in 10 to 15 years. If you're willing to wait that out, then don't put it in. Don't look at the price, and I guarantee you're going to be very happy with that decision.
Yeah, I have a very hard time believing that we are gonna cross down to 20K ever again. I think it's It's almost like maybe we never hit the under 100K again, because I see a lot of resistance, a lot of buying power, a lot of a floor when it comes to 100K. Like that's it's almost like when it reaches down to 100K, it seems like there's a lot of people waiting to get those Satoshis like under 100K at like 90K. I think also there's like some mechanic where a lot of people said like those automatic dip buying machines that say like, hey, if Bitcoin drops under 100K, make sure to transfer some more money in there and to buy it up. So I maybe we never crossed significantly under 100K ever again. I don't know.
Yeah, I think we might, especially towards the end of 26. But I believe that there are a lot of institutions and a lot of funds and individuals who, if they see a 6, 7, or 8 in front of the number, and it's 5 digits, they are going to buy it heavily, and that's going to just form a new base of long-term holders who move that price up incrementally, and then again, you get those 1 to 2 moves per year where it's very explosive to the upside. And so you just wait and be patient. And then as the system continues to break down, people fly to it. And you're going to see that happen over and over again. Is you'll do a 20 to 50% move in any one year, and then you'll get a redistribution, and then goes back down, and then it accumulates again. And so you get these structured institutional moves where it just kind of moves up and up until you get a whole paradigm shift where uh, like people, the U.S. announces a buy, or BlackRock announces that this is the asset that they're going to invest in, and then it just blows out again. And but I think to kind of close the idea on the 4 year cycle, if you look at the theory of technology, like truly innovative technology, there's three life cycles to it. There's the growth phase, which I think we're in right now, but actually closing the window on that, kind of ending this phase. Um, and this is where we're experiencing some diminishing returns in terms of comparisons to prior cycles. I think 2028 will kind of be the end of that phase. And then you go into adoption, where it becomes truly adopted and you get this exponential S curve. And then dominance is the last phase. And that probably won't happen until you and I will be very gray hair, I think, when that happens. Um, but there will be a period of time where it just continues to fly, and like the Samson Mao God candle idea, I think he's a little early on that thesis, but I do fully believe that once you kind of pivot into this adoption phase, it's just going to skyrocket, and there will just be years where it just continually climbs up.
I'm waiting for this moment of 100K upwards daily candle in Bitcoin. That's crazy. For me, it's crazy to see even like 5 or 10K. I think we had a 10K candle at one point. That's crazy, because like just 6 years ago, the Bitcoin price was just $5,000,
I know.
$10,000. It's crazy to think about that. I have one question that I ask each and every one of my new guests on the podcast, and the question is, what can we learn from you besides Bitcoin?
I think a lot of Bitcoiners, they love the idea of Bitcoin being perfect money. I'm wholly in that camp, but don't forget the fact that financial markets are equally as important as money. And one thing that I've learned over the years is, they kind of dump on other ideas of blockchain, and I'm by no means a DeFi guy. I don't love like 99% out there, but you still need financial markets to have a global economic system. And so, like, yes, the impacted, or the long-standing institutions that have developed these markets, uh, for better or worse, they have provided a lot of benefit to society. And so, I started out hypermaxy, Bitcoin's the most important thing, and kind of ignored the market side of things. But then as I started to trade and understand market dynamics, macroeconomics, you can't discount the fact that markets are so important. And so if you see quote unquote blockchain technology, I hate using that term, but other blockchains proliferating and developing, kind of adapting traditional markets so that they can allow Bitcoin to be more fluid in the system, that is a very good thing. And so allow that to happen, root for it, because you want markets to proliferate. And um, yeah, I guess to cap that off is just be open minded about market evolvement over time.
Yeah, 100%. You have to always like the whole reason we all got Bitcoin was because we are open minded, and so we should always stay open minded to the change in the markets. And the market is never wrong. You might just behave differently than you expect. Really, really cool. We have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question, what habit of yourself do you want to change in 2026? It can be starting a new one or stopping an old one.
Hmm. That is a very good question.
Yeah, as we're coming closer to like New Year's Eve, and as we're coming closer to like end of the year, and now the time starts where we talk about New Year's resolutions and all of that.
Yeah, I think it's a very personal thing to me. I consider myself a very patient person. However, I am always forward looking. What's the next thing? Where's the market going to go? And so a lot of times that takes away my mind off the present. So over the next year, that's a good challenge to myself to be more present in life today, because what is life if you're just thinking about the future constantly?
Yeah, there's this weird balance that you have to strike, that you are in present, but you have to study the past to understand the future and to see what's coming. But then you should also stay in the present. It's like there's some interesting dynamics that you kind of have to like always balance, especially if as critical thinking people that always think about like what's to come, like what does this mean and all of that. And I mean, I do it on a daily basis with the podcast, but it's not easy.
No, it's not. Do I get to ask my question now?
You can absolutely do that. I usually do it after the podcast, but if you already have one, like the people would love to hear that.
Okay, here we go. I don't know if this is asked before, but as a Bitcoiner, if you were to go to the most anti-Bitcoiner in existence, which might be Peter Schiff, who knows, um, what would be your tactic in orange pilling them?
Gosh, that's a good one. What would be your orange peeling strategy? That's crazy. It's because um it for me it really highly depends on like who you're talking to, because but I also feel like a lot of those very anti-Bitcoiners have an incentive not to not understand us.
Yeah, yeah, I agree. A lot of it is just ego, and they made a decision that it's not what it is, or they're against it, and then they just are stubborn in that decision, and aren't willing to change their minds.
Yeah, I unfortunately see the same thing. But yeah, anyways, I thank you so much for being open-minded enough to come on my podcast, I guess.
Thanks for having me. It was a blast.
It was really, really cool. Before I let you go, where can people find you, ask you questions, and reach out to you?
Sure. Yeah. So they can look at my LinkedIn or my X. But yeah, I would say Twitter or LinkedIn are the best ways.
Absolutely, really cool. I saw you are now also like active on Twitter. I always love seeing people on Twitter. It's my first real platform I built, and still my biggest. And I don't know, there are a lot of critics of of Twitter and or X, however you want to call it, but it has some really cool things to it, and it's sometimes good to stay away from it, but in general, I really love it.
Yeah, it's good to get market sentiment. That's what I use it for, and real-time updates. And sometimes Twitter's faster than giving information than any other media sources, so it's useful for that too. And you
Yeah,
can stay connected to other Bitcoiners.
if something happens in the world, it probably is best covered on Twitter. Like if anything, like no matter if it's local or global, like when things happen like massively, like the Trump when he got shot in the ear, or like even the thing with Charlie Kirk, or when Trump and Elon had that fight, like there's so many small things. So even in Vienna, there was a small thing happening in a local restaurant. This was all best documented in real time on Twitter itself. Like the news things were way, like if you follow the news, mainstream news cycles, and you follow Twitter, you're like, oh yeah, I know that already because I've read it on Twitter like 20 minutes ago.
Yeah, yeah, a lot of it, I think mainstream is a slightly slower just because they have their verification processes. Because Twitter also has, yes, you can get the real-time alpha, but it also has so much fake news on there that it's like you have to really be discerning of what to believe.
Yeah, it's that's I guess the disadvantage of having real time fast news, that there's also no verification process. There's no review process. I mean, I guess there are the how are they called? Oh gosh, I forgot it. I'm myself one of them. I completely forgot it. The context cards. What are they called? Like the things that are under the tweets if there's something wrong. Oh shit! How is this called? I know that.
No,
Oh,
I'm a
community.
Twitter newbie.
Community notes. Sorry, yeah. The community notes, they are really good, because if you see something wrong, you can almost always, there is someone that wrote a community note on that, and then the people are voting on that. And this is my favorite tool in all of social media, because it's the best tool to fight, really fake news without having censorship from the platform, because this is always the balance. You have fake news or censorship, but this is kind of the balance. I don't know if you know community notes, but it's basically like anyone in the community notes community can write community notes on posts, and then they can vote on if it's right or wrong. And it has some processes of like who can write community notes. It has processes of like who can rate them. And in the end of the day, this is the most precise tool that I found till now to actually bring context and bring the real thing that happened to a fake note. So every time something looks like AI, I click on it and look, and oh, someone already made the post like it's AI, and here you can see why and all of that. So that's
Cool.
if you haven't checked that out, like look it up. Like that's one of my favorite tools in social media, because it really defies censorship and the fake news things.
Yeah, that's interesting. How do we apply that to someone who's bear posting about Bitcoin being susceptible to quantum computing hacks or any of this other garbage that's not true? That'd be fun to see Bitcoiners go and tear that down.
Yeah, like community notes are also unfortunately misused sometimes to fact opinions, but they're very good. Like it makes it in the community notes, but not in the public ones. But they are like too much already on community notes. Thank you so much, Tim, for being on, and also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye bye. This content is for educational and entertainment purposes only and does not constitute financial advice.